This channel is for educational purposes only. Make sure you do your own due diligence before making any investments. And there is inherent risk in trading, so it's speculative. Just make sure you keep that in mind. Hi, this is Joe. I'm going to be on Stock Charts TV over the course of the next 3 weeks. Next week, I'm going to be on your Daily 5, which is just a quick 10-minute segment. And then after that, I'm going to start my new show on that channel. For June 17th. It's a 30-minute show once a week called Stock Talk with Joe Rabil. People will be able to request individual stocks, and I'm going to go over them. And there will be some teaching segments in there as well. So anyway, I would check that out. And then actually the week after that, I'm going to be on the show called The Pitch, which is apparently a pretty popular show. 3 of us are going to be on there giving different stock picks. So check it out over the course of the next 3 weeks on Stock Charts TV. You might find some of that of interest. Let's go ahead and get into the market. I'm going to continue to show what I did last week. I'm going to mix it up a little bit. I will go back and make sure I'm covering all the market conditions on a periodic basis, but I'm not sure, especially in the type of environment we're in right now, if we need to do that every single week. If something's important, I'll definitely want to cover it. I like to look at things in multiple time frames, but for now, I think until we see something kind of blatant taking place in other time frames, I'm going to sort of focus on the weekly and the daily. And be able to cover a few more markets that way. So let's go ahead and get into this spider chart. I've got a weekly on the left and a daily on the right. And one of the things that I've been saying for weeks, if you've been watching my videos, is how the 18 and the 40, 18 MA and the 40 MA on the weekly chart are moving up at a parallel rate. And also the fact that price is not getting too far away from the moving average, from the 18-week. And so I think that probably is a decent sign that this is still sort of an orderly uptrend. And, as long as that remains the case, then I would consider this to be a pretty solid trend. Now, a few things that took place this week I think are worth noting. At least right now, the MACD is below its signal line again. And so it's interweek, and we're only at Thursdays. We've only been through Thursday, and so today we'll have to see how this acts. If it has a good, strong day to the upside, then this might not actually close below its signal line, but just something we want to mention, because once that happens on the weekly chart, it usually takes a little bit of time, at least a couple weeks, to kind of get going again. And that would increase the odds that maybe we come back down to test the 18-week a little bit more. Also, the ADX has dropped down below 25. I mentioned that before. Just a few things we just want to kind of keep on the lookout for that might increase the odds of a better test of the 18-week. If we go and look at the daily chart, we've got sideways moving averages here. So there's no real trend. We rallied up to this peak, and now we're coming down and testing these lines. So the question becomes, does this hold this line and bounce off of it and turn up? Or do we fail at this line? And then if that takes place, then we're probably coming down to test support down in this zone down here. So this is what we're going to be watching. And I think, keying on these moving averages, the 18 and the 40-day moving averages, I think will tell us a lot over the next 24 hours. If we can hold that, then there's a pretty good chance we're going to come back and try and test these highs. If we don't hold, then we're coming back down for a deeper test. Let's look at the QQQ. So this is a little bit different. While we do have rising moving averages, you can see that it looks like we're putting a little bit more pressure on these lines. I mean, this is coming down and sort of sitting on this moving average, and it's starting to look a little bit more like water building on a dam. And if that's the case, then I could see this sort of breaking down below this moving average. And if that's the case, then we should be expecting a longer consolidation and a bigger test of support down in the lower 300s. So just something we want to be on the lookout for. We made a new marginal new high on the weekly, but it really just failed pretty quickly. And what I've been saying for the last several weeks is that sideways consolidation is the highest probability, and that seems to be the case right now. The question is, if we break the 18-week, do we come down and test this bigger support zone down in the 300 to 305 area? We're just going to have to see how violently it breaks the 18-week and if it breaks it. Right now, we're sitting on the 18-day line. And if that holds, then we could see this sort of lift up. And that would mean that we're holding the 18-day and the 18-week. So something to key on right now is around this 327 mark. And I think that'll tell us a lot over the course of the next 24 to 48 hours. We want to be watching that. Now, if we look at the IWM, to me, this is a totally different situation. You had this big, strong move to the upside on the weekly chart, and it's just been working sideways. And notice how every time it moves down, we get a tail on the candle. Tail, another tail here, another tail, another tail, another tail. So every time you get down towards, say, that 215, there's buyers underneath. This is a much healthier consolidation pattern. The MACD is trying to work off the overbought condition by kind of coming down here. ADX has already done that. It might spend a little bit more time going sideways, but I do like the way this is setting up. Now, if we look at the daily chart, I think, as I look at this, we don't really have a pattern of, where green over red or anything like that. Right now, red tried to move up and it's really sloppy. And what I'm looking for in this situation is for green to come up and hold and then come back up and break out. And we want to kind of take out the high of this level right up here where red DIs have been. We want to see green kind of break out above that. And I think if we do that with price, taking out this peak up here, if we have that kind of combination, then I would think we're getting started. We're getting ready to start another leg to the upside. So that's really what I'm on the lookout for in this index. But I do like the looks of what I'm seeing here. And then look at the Dow Jones. The Dow Jones isn't even pulling back. It's really been just a little tiny consolidation. MACD is still in an uptrend. And notice what the ADX is doing with a nice move. And the ADX keeps rising, and it's above 35 right now. There's really no sellers on the Dow Jones or the DIA, which is the ETF for the Dow Jones. And so that's a good sign. The one thing I would point out, if you notice the DI lines on the daily, and you can look at it on any one of these indexes, they're so much sloppier on a daily chart than they are on the weekly. The weekly tends to have smoother trends. It's why I really like to look at the weekly chart. The daily tends to get a lot of whippy action, and you get and the ADX is sort of showing you this. So you got to be a lot more careful if you're trading off the daily chart. You get whipped around a little bit more. Let's look at the oil chart again. This time I'm actually looking at oil and not the OIL. In other words, I'm looking at the futures contract. And I just wanted to point out that we are taking out, it looks like we're taking out this resistance level from back in March. And it looks like if that's the case, then we're going to work our way up towards like 75 or 80 on the oil contract. So I think that's sort of intriguing to me, and energy stocks are trading pretty well. I like the looks of this daily chart. We went sideways and we formed a low ADX condition, and now we're breaking out of this. I'd love to see green DI get going and break out above 25, but overall, this pattern looks pretty good. And then lastly, I want to look at this TNX. This is the 10-year Treasury yield. And let's start by looking at the weekly chart. And if we go back and look at how this came back up through 1.5, and now it seems like it's using 1.5 as support. Now, 1.5 was a key level going back for the last few years. And now that we've gotten above that, we want to make sure if we hold above 145, 150, then you have to sort of assume the next move is probably up towards this 2 area, which is the resistance from here. So that's kind of what I'm on the lookout for. And I think the reason why I think this is so important, there are pretty strong implications when it comes to like the bank stocks, financials in general, but definitely the banks will benefit if this continues to move higher, at least to a certain degree. if we see rates moving up so strong that it really affects the overall market, then yeah, then the financials will get hurt. But I think they'll get hurt to a lesser degree. So it's just something we kind of want them to be on the lookout for. And in fact, I would want to just make a quick note. If we look at the XLF, look at what this chart has been doing. Really hardly a pullback in this thing. And I think a lot of that just has to do with the fact that the rates continue to move higher. We're probably due for some kind of a pullback to the 18 week at some point, but I'm pretty impressed with what's going on here. I'd probably hold stocks in this area right now. I wouldn't necessarily be a buyer because they are a little stretched in the short term. So anyway, I did want to give you a quick update on a few different markets, and please post any comments or questions, and we'll see you next time.